Weekly technical signals are turning much more bullish. Here's what you need to know before the bell. So lots of commentary concern here lately about the bear market, of course, Powell raising interest rates, the impact on the economy, potential recession next year. Very easy to make a bearish case for the markets right now and why markets should go lower. But as we've been talking about lately on a daily basis, a lot of the indicators are certainly turning much more bullish and very overbought right now. So we do expect in the short term for the markets to have a bit of correction here, but that is likely going to be a buying opportunity. And the reason we say that is because the weekly signals, right? Slower moving weekly signals have certainly improved to a great degree that suggests the market bottom is in and likely prices are going to start to work their way higher over the next couple of years. One thing we can look at here for that is our weekly MACD indicator as well. So our MACD indicator has been a very good indicator historically for moving money in and out of the markets and managing risk accordingly. Back in 2020, of course, that was a big sell signal for the markets. We got that sell signal really right at the end of February. We had reduced risk in our portfolio at the time. That buy signal came back very quickly after the decline in the markets, and of course, lots of stimulus and support by the Fed, got back onto a buy signal. That sell signal then occurred again here back in January of 2022, and recently we had a false kind of a buy signal here back in early June, and that led to the June, July, August rally. But now back on a fairly good buy signal here with relative strength improving on a weekly basis. So again, we've got some indicators in here that suggest that markets are currently turning a bit more positive in terms of overall longer term price action. Furthermore, when we talk about the market last year, the market was extremely deviated from the very long-term weekly moving average. So this is the 200-week moving average here. Again, a very long-term, slow-moving, trending line. And that deviation had to be corrected. So in a correction process, and again, this is the difference between a bull market and a bear market. In a bull market, which is a rising, trending, long-term move in prices, you do have corrections back to that moving average. And again, we've seen this previously, but this correction last year came right back down, tested that 200-week moving average, bounced off that nicely, and we are now moving up above important resistance levels and above the 50-week moving average. We've got one more hurdle here, which is going to be right around 4150 on the S&P 500. But if we can move above this 100-week moving average, pretty much you're clear sailing to make a move back towards previous highs in the markets. I know that's tough to believe right now with the Federal Reserve hiking rates, the economy supposedly in recession, all those type of things, earnings slowing down. But remember, as we've talked about before, on a weekly basis, markets are pricing in a lot of this action already. They're already pricing in possible outcomes for the markets. And what markets are starting to tell us here is that markets are improving. And we've got some indicators on a weekly basis that certainly suggest that the market is in a more bullish trend, at least for now. Now, does that mean it cannot change and become another corrective market at some point in the future? Yes, that will actually happen. The question is when and how far does the market rally from here? So as we've always discussed, be careful being all bullish or all bearish on the markets because, again, our job is to navigate and manage risk. And the only thing that we have to go on really is trying to understand what the market is telling us about how to allocate capital to the markets. And right now, that trend is improving. Those technicals are improving. Now, are we on a full-blown bullish buy signal right now? No, we're not yet. But we are getting in a much better position. In the next week or two, if markets can move higher, then we're going to have a better opportunity here. My suspicion is we get a correction back to around 4,000. That holds support at the 50-week moving average. That'll be a good buying opportunity. Then a move from there back above 4150. That potentially gets us a move to 4,200, 4,300 on the S&P by the end of the year. That certainly would not be surprising. I'm your host, Lance Roberts, and that's what you need to know before the bell.